The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. Becoming a Kodiak bear here today as we see one of the worst days in the last 3 or so months in the market. As we start the show out here today, 1968 on the S&P cash, pretty much hammering those lows out here. A little over 2 billion shares as we start the show. So, on a day like this, we're down as hard. I'd like to see a little bit more volume. And my guess is that we will see that volume in the closing minutes. And that we saw a lot of keys that this market had the ability to crack rather quickly. I talked about it on Monday, talked about it on Steve Rhodes' show this morning. But I will probably, I'm going to save all those clips. I may play it again, but that the bulls were willing to basically string up Mr. Fleckenstein on last Tuesday, to me it was pretty much the thing that solidified everything that I'd been looking for. I remember catching a huge downdraft, and I think it was April or May of 2010. And the one thing that hit me then was I was in a restaurant, and 3 different people were talking about stocks in the restaurant. And we had a huge smackdown right after that. But I think it's April or May. It was 2011 or 2010. I'll have to go back and look. But a lot of times it's something outside that it triggers and congeals my thinking. In this case, I have a feeling that all the elements were there. But when you find bulls that are willing to string up any bear, you need to be extremely careful, because that means that they have zero fear to go out and propagate the belief that markets only go up. And especially, they weren't mad that he wasn't even short. He was just saying it was time to go short, or it was getting close to go short. And that's all that it took for the moronic and vapid host and 2 more street dogs that only know the market goes up to go after the guy. And I think I will save that for a time to come. If I ever meet him, I'm going to play that clip. But Mr. Fleckenstein, one of the better bears out here, but another good example of why you don't have to trade all the time. You can wait for the fat pitch out over the plate, hanging over there, and then you can hear it, and you can just walk around the bases once you get the kind of good wood on the ball that you want. But, of course, we are down, and I'm going to have just a little bit of fun myself.
Red alert! Code red. Repeat. We are at code red.
Well, we are at code red for people. Of course, this is just a minor pullback. I mean, it's not even a 10% pullback in the market, nor 15 or 20. That we've been going up so long means that we could come back a lot longer. I have been talking that I've got some puts in the Tech Insider. But even then, I bought them into December. It's going to be a war. These bulls are not going to just roll on over. And to tell you the truth, I would have rather seen 3 days down maybe 15 points than 10 points, rather than 1 day down 30 points. Unfortunately, that tends to exhaust a lot of the selling pressure fairly quickly and run the stops. But if you didn't catch me earlier, my thesis has been that yesterday was a gift. I think I said that yesterday on my show. That was a opportunity for me to launch 3 more short positions into my daily newsletter. I think all of them have done pretty good. We've got a longer term one in the Tech Insider that we were about, I think we entered at about 130. It's already printing about 120, and I've got, December options on the thing. And, occasionally you can find this low-hanging fruit out here. But I have a feeling that we're going to see a lot of up and downs. But the reversal we've had over the last 2 days is going to at least make the bulls think twice about talking about no end to the blue sky. In fact, we've been talking about watching the PBS special, The Crash of 1929, and maybe I'll find it during the break, but there's a great song. Did you know that they were writing songs about brokers in 1929? Popular songs. Call my broker because I'm high. What was it? I'm bullish on you. It's kind of ridiculous now, especially a lot of those goofy songs are at any point. But to think that they put together some kind of bullish love song about the markets and your girlfriend, pretty amazing. But I see a lot of parallels. We've got just a lot of things going on at once in the world. And starting to see some real action in those junk bonds. I'm not exactly sure what it is. We brought up the investigation into PIMCO, and maybe there's nothing there, maybe there is. But it is getting some pretty good action in the junk bond market, and I'm thinking that maybe there's a few more rats and cockroaches to scurry out once you turn the lights on. And maybe we'll see some more out of PIMCO, maybe not. But at the same time, I think that there's a market like this that's been up 3 years straight. You're going to find somebody just like, what was the guy's name in 2008 from New York that ran the big scam? I'm just having a mental break right now. What am I thinking about? Fleckenstein comments on the CNBC interview. Okay. Trying to remember his name. But they hated him. Madoff. Thank you. I just couldn't think of him right now. We probably should all forget him other than that. But Madoff, basically, he could continue his little scam until, of course, the water started coming back out. And even Buffett says that you can tell who's swimming without a bathing suit when the tide goes out. And I think we're going to see a little bit of that kind of stuff. So we'll take a look at it. Okay. You can give me a call at 877-927-6648. And you can also email me at path@tfnn.com. And you can post a message in the den if you want me to look at something. Got a question here from our caller, not a caller, but a email from Rob. Rob didn't tell me where he's from. Just do that so we know that where you're listening from. We'll get to just, he wants to look at SanDisk. We'll look at that in just a second. Andy's got a new article out, and it's about corn. And I'm looking at the corn ETF out here. My God. I tell you what, one thing about commodities, they get in a trend, they don't get off. I've also heard another wonderful idea out there, and it's not often that I get any kind of decent ideas from CNBC, but the Nigerian brothers, one of them, who can tell which one is it? Both of them have ponytails. What's the odds of that, too? And why don't we collect a fund, get a hairdresser to cut off the little ponytail? Hadn't that gone out about, 100 years ago on British sailing ships, the tiny ponytail? Anyway, it bothers me. But anyway, there was kind of an interesting discussion, and they had one thing that I hadn't really thought about, and very rare that they come up with anything new. But this was new. And the thought was that oil prices have been manipulated for a fairly long time. And what we do know is that is that when oil prices get depressed, what they'll do is just take a lot of those tankers and have them circle around in the Gulf until the oil price comes up. Then they'll go pull into the docks and sell it. Well, in trains, with the train cars, there just aren't enough. You can't leave them on the tracks. You got to bring them in, you got to dump them. And that most of our crude is now coming from the Balkans. There's no easy way. And, of course, no one's building huge storage facilities because no one will allow them to build pipelines. That there's no easy way to absorb that kind of action when a lot of crude comes in. And that's going to make it extremely hard, especially in the United States, as one of the biggest users of crude, to really manipulate the price like it has been for years with ships sailing around in the Gulf. And like I said, not very often they come up with a new idea that I haven't heard before. I'm sure that they're fine guys. Andrew Heck says that maybe one of them could beat me up, or both of them. One of them was an ex-NFL player. He actually played for Tampa, by the way. So maybe I shouldn't be that afraid of him. But he played in the dark years, let me put it that way. But certainly, you look at Techram out here, look at some of these others. We're probably, I think, in the B2C of some of these others, like the miners and gold. Gold, what is it up here? It's up about $4. I think we're in the B2C. I think we got down to the first level of support. We're probably going to do the B2C here and maybe a little bit higher, and then take the next run down to 1180. Besides that, hard to get too excited about anything or focus on too much. Why we've got a market that is kind of in free fall. I guess it's kind of slowed down here a little bit. But I'm going to be watching that volume very closely into the end of the day. But we are at lows, and this is the kind of day where you get another 10 or 15 points in the S&P on the close if you don't get any kind of relief. And, of course, being on a Thursday makes it doubly hard to get a rally, because a lot of people don't want to be long going into a weekend. If you're going to buy something, maybe you go buy it the last 2 minutes going into Friday. But certainly you don't want to be buying Friday. Maybe Monday morning or Friday at the close if you think you're bullish. But to me, this has got every indication of another day where you drop, like I said, 10 or 15 points at the close. And with a lot of these IPOs pricing and out of the way now, it looks to me like it's going to be very difficult to find any more cash. And there's no end to the amount of IPOs still coming down the pike. I'm wondering how many of those will get out. I know 4 already have been canceled this week. But we had the second biggest IPO also this week behind Alibaba. We'll be back in a minute. Give me a call. We're going to look at SanDisk when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had, who was it? Rob want to know if SanDisk looked like a good short. And I got to tell you, if you missed the Tech Insider Hour on Friday last week, I said that one of the things that's going to happen is that, or one of the new things that's happening, is that a lot of prices on memory is really starting to fall because there's a new version of memory coming out. And to me, I have a feeling that SanDisk, why maybe a short term is going to see a pullback. Long term, I think these stocks are going to hold up better than most because of that new kind of memory. It's going to offer them new markets that they didn't have. I've got a short position based on companies that are going to be hurting because of that. But I don't think I'd be shorting MU or SanDisk here. Yeah, are they going to come back? Yes. But are the wheels going to fall off the wagon? I don't think so. And that's the problem. You want to be looking at stocks that have a considerable issue with their long-term outlook, if you can find it. And I think that there are more than enough stocks out here that have problems. Two, you want to find stocks that not everybody's looking at. If SanDisk, how many times is it on the ticker SNBC out there every day? If you find a stock that's probably a little less well-known, it's probably going to be a little less well-cheerleaded and probably the ability for it to fall a lot faster. If you look at Tesla today, it's, 247 or something. just too high of short interest, too many people all on one side of that trade, which is short, you're probably going to get some kind of big spike. They're probably going to run the shorts out of Tesla, and you're going to get an opportunity. So SanDisk, if you wanted to have pulled the trigger up here at 104, or that day that it did do the what Joe DiNapoli called railroad tracks up here, that is the 19th and the 18th, where you had the reversal on this thing, that would have been the day that you had to basically short that at the close and or at the open the next day. But now the gravy is out of the trade, let me put it that way. CMG, another company that's going to be heavily defended. And again, another reason that I would probably look for better shorts out here. Are you going to get some cash out of it? Yes. Are you going to see this thing pull back 30 or 40%? I don't think so until after Christmas. I think a lot of these big names, like I said, it's going to be a slow hog out here until some of these bigger names really crack. We've seen the Russell. We know that the small caps, then we're going to move into the mid caps, then we're going to move into the large caps. But these large caps and the names that are constantly on Bloomberg or CNBC and the people are always calling in about are probably not going to be the ones that you make the most money on. Are they going to pull back? The answer is yes. But of course, the answer, the question normally should be, what stock is going to be the weakest over the next month, week, or year? And for the most part, it's going to be hard to defeat the thesis of investors and get them scared about selling Chipotle until the whole market falls apart. Apple, we've been inundated with it. And of course, it goes up. We see the fundamentals on it. But am I betting that wheels fall off Apple and shorting it? Can you make some money, in a few days? The answer is yes. Is it going to 96.14? Yes. Do they have a lot of problems? Yes. But there are going to be people going right back in there. There are a lot of huge funds in this thing. They're going to be supporting it. They're going to be coming up with stories. There's going to be ad nauseum upgrades. I'd much rather be in a stock that I didn't have a lot of people rooting for. My guess is that you look for Apple, that the big money is going to be made to the downside. Is probably going to be next year, not this year. So I would say that we've seen the small caps, and we're looking at the mid caps. So let's think about mid caps right now. Let's think about these big caps maybe late into this year. Are they going to pull back? Yes. Are you going to make the big money that you would make in the mid caps? I don't think so. And that would be my way of looking at that now. Unless you find a stock that has a huge issue with it, maybe you could talk about Caterpillar. Certainly Caterpillar has some big issues against it. And, we're back down. We're probably going to break this previous low today, that $99.11 low at 6 million shares. We got 5.7 already, or we have that yesterday, 5.7 yesterday. We've got 3.3 already. So, some of these, it's got the kind of makings to do it. But are funds going to come back in and support these things, try to sell them to the public and gin them up? The answer is yes. We've already gone through distribution in small caps. They've been crushed. They're doing that in the mid caps now, and that's where the opportunities. Large caps, I think, next year. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm going to have to start figuring out my winnings. I wonder if I should start singing that song about playing poker from a country artist. There'll be time enough to count 'em when the dealing's done. Anyway, I will not sing again this show. Anyway, it is one of those things that's tough. Trying to remember. He's in a commercial right now. What's that guy? The Gambler? Yeah, but what's the guy's name? He's in some kind of commercial now running for, it's Kenny Rogers, but he's in some commercial. I'm trying to remember what it was for some auto insurance company that's always, the ones that's running the ads that sometimes has the little lizard, sometimes doesn't. Geico? I think it's either Geico or Progressive. Can't remember which one. He's got a little ad going on. I haven't seen him in a long time. Okay, we're off at 29 points on the S&P cash, closing in on 2.2 billion shares with about an hour and a half to go. So again, I'd like to have seen a little bit more volume. It's not uncommon to see lighter volume off the top on big market moves. So when we continue to keep moving down, the volume should come in the next few days is what we should see. Now, since we've taken such a big swing on the downside out here, we're probably going to do one or two things. One, we're going to go sideways for a couple of days and then continue down, or we're going to continue down yet again tomorrow. And on that move down, we'll see something. You could probably figure that if we do open up down, that you can look for another 30-point down day, and then one more maybe a few days later. So this thing's probably given us a good indication that we've got another 60 points to go before we find the B point in an ABC. And that can start giving us some ideas about where we want to cover our shorts and our short positions. So we will look at that also. What are your thoughts on LB as a buy here? Proof of Fed deflation, LB. Okay, L brands. And let's find out more about this. Why would it be a proof of Fed deflation? Operates a special retailer of women's intimate and other apparel, beauty, and personal care products. I don't know what this has to do. I wonder if he's talking about some future and not an equity out here. What can you say? L brands. This thing's up here certainly higher. Maybe he'll talk more about it. You got L brands up here, certainly up here at the highs with volume. One of the stocks that is bucking the trend out here. Maybe he will email me back with more information if he's talking about lead or what else he's talking about. I do not know. Okay, going to get into some of the stocks that are moving here today. And, of course, the ones that are the worst hit and some that are bucking the trend, too. We've got a few of these, I guess the gold miners are kind of bucking the trend a little bit. STO, let's take a look at some of these ones that have gotten hit here today and see if there's anything in here that we can see. I don't know if there's a whole lot we're going to see out here other than the fact, as I said, a lot of these are coming back and filling these gaps. In the case of Statoil, ASA, STO is the symbol on that. You've got a nice little gap that came up with 2.2 million shares. We've got 1.5 already, so expect us to fill this gap through 2640. That gap happened on, March 3rd. And you've got another gap, which I would imagine this thing is really headed back for. It's a double gap. You had a gap down, and that gap down happened on the 23rd of January. Then it gapped back over that same price point. When you start seeing these double gaps like this, and in fact the Art of Timing the Trade charts really shows this off very well because you see the different colors where the gaps are if you're watching this on Tiger TV. We've got the previous gap. It had a much bigger gap over that gap, and that day came in on 3.2 million shares. My guess is you're coming back into that gap, and you should look at this one at about 24.75. But to me, that looks pretty good out there at that price point, not before. What else do we have? CNL. Of course, you can give me a call at 877-927-6648, or you can email me. And just make sure that you expand on it, since I won't be able to ask you any questions about it. And make sure it's not ambiguous. We're looking at Clico Corporation, CNL. Another one out here. Like I said, a lot of these stocks, we're starting to find a lot of them in these levels with lighter volume and not bad looking setups out here. If you were bullish, and if I had to eat my hat and decide that we were going higher, there's certainly a plethora. I always like using that word, but don't have it enough. Plethora of stocks out here coming and filling these gaps with lighter volume. Clico is certainly one of those. Let's look at what they do. But this thing gapped up on June 19th with almost 900,000 shares. Came back with about, what can you say, probably pretty close to it. But now we're back into that level. And there's been no volume in the last 4 days out here. What do these guys do? Operate a public utility holding company primarily in Louisiana. Didn't know them. So maybe this is the safety trade. As soon as this thing washes out down here at about $53. Don't see any sign of that so far, other than we pretty much filled that entire gap and there's no volume. So there are a few stocks out here that look like they are starting to set up some level of support to CHMT. CMHT. Oh, how about CHMT? CHMT. Yeah, Chemtura Corporation. Profile. Now this one's down. Volume has really picked up, and you've got a high volume low out here, 3.5 million shares, and off the bottom, you don't want to see these huge levels of volume, even if it's on an up day down at the bottom, because most likely that is going to be the kind of low that gets tested. You're going to have to get through the August 1st low on this at 22.88, 3.9 million shares, and probably not enough volume to do that. But this thing's probably going to fool around until it comes down and tests that 21.96 from May 1st. Got a question in the den to look at BIS. And, of course, ProShares Trust. And I'll get the full dope on this one here in just a second. What do we have here? Inverse 2X of the daily biotech industry. So, not bad out here. You got, boy, I tell you what, this one is a spiky little thing when it comes to volume, isn't it? Where would you want to be on this? Okay, it's still under a 9-day moving average, so you'd still have to watch it. It just touched it today. I think you would want to close over that. And, of course, let's take a look at the displaced moving average. Yeah, it's still under a trend line. I can't say that I see anything in here that says that I would be jumping on this one. Maybe a couple more days. Maybe this is one that kind of goes sideways out here and moves higher in a couple of days. Not a bad looking chart out here, but I have a feeling that maybe some of these are going to take a few more days to develop. Maybe you're going to have just a little bit more pressure to break that biotech index. And of course, when we look at that, we want to look at the IBB. So we'll look at that real quick. You know, you got a nice reversal and a test of the high out here on the IBB. Could you pull the trigger? I think so. I mean, you got everything out here. The problem I have is that I think everybody, this is probably the one that they're going to support the most, and it's probably going to be a little hard. I would just give it a few days out here. I'd be willing to wait into tomorrow and start taking a look at this one. But I think the ones that have been up here at the highest, things like Tesla, probably already have a lot of short interest in them, and these things are not, the wheels are not going to fall off. So if we would have probably fallen a little earlier, probably wouldn't have as much short interest, wouldn't have that many natural buyers. And when I talk about a stock and the wheels falling off, that's exactly it. If you have big short interest, you can still be right, and you won't make as much money on a stock that doesn't have as high a short interest, because if it starts moving down, you've got all those guys that have to buy back. You would like to find a nice air pocket down there where there weren't a lot of shorts to jump on in. And I found one like that. Like I said, I found one that basically dropped $10 in a couple of days. But a lot of times it is not the ones that everybody continues to talk about. So I'm going to say that these are going to be huge winners for people. It may take another couple of days for these things to move. I just would wait and would love to see maybe one more bounce up, and maybe all the shorts in the biotechs kind of blink and then get into it. I think you can draw a lot into what we saw on Tuesday, and that was an opportunity to short. I just don't see, are you going to make some money? I think the answer is yes. Do I think that this market is weak? Yes. Do I think that these most known areas and sectors are going to wait until probably either another month from now or maybe the first of the year before they truly break? That's my thinking as of today. Mid-caps are going to break between now and the end of the year, and then we're going to see the big caps break at the beginning of the year. That's kind of how it looks like to me. They're going to try to keep the indexes up as best as they can, even though they're going to be weak. But the real devastation and breaking of these bigger stocks, minus Apple, I think Apple's a special case out here, is going to be a weakness next year. So look for some mid caps. Look for some things that people aren't talking about now, that aren't in the front pages, that have decent volumes but have low short interest. And unfortunately, every time I looked for the last month, short interest in these biotechs just seems to go up. And again, you're not just talking about the short interest in the IBB. You're looking at the short interest in all those biotechs. And I think that has to kind of bleed off before we're going to make the big money in biotechs. So just looking at that. Let's see what else we have going on here. I need to clean up some stuff. Take a quick look at the market. 1970 out here, 27 points off, 1.4% on the S&P, 2.2 billion shares. So, would have been nice. Thought maybe we had an opportunity to go blow this out before the end. Maybe we gap down tomorrow. Maybe we don't. Like I said, I think this is going to be a lot longer pullback and probably going to be even a little bit more painful for the shorts than they think today. It's all rosy today. Going to be a long and patient road, I think, ahead. Okay, so what else do we have moving out here? Everything's being hit out here. Let's take a look at some of the other stocks out here. I got a list. I go on details. Okay, so we should look at housing out here. Where's my housing? Winners, losers, housing. I had a housing one out here. Yeah, let's do this. Let's look at housing another way. Portfolios. Okay, got that. Let's look at home builders out here today. Because I wanted to see how they are doing. I said it was going to be very hard for this market to really go down without it. Well, we had KBH kind of try to bounce out of the bad news from Tuesday. Out of the bad news, and it's back down. Certainly have all the volume in the world on this one, and you even today have 9 million shares. Pretty much a devastation for this at this $15 level. See what else we have out here. You probably break in this level on KBH Homes, which would take you to $13.12. Let's see, what else do we have out here? FMA, DH Horton, it's off 2%. Another one that was guiding down. Let's take a look at this. Okay, this one's headed to $19.19, so this still has 75 cents to go, and there's a nice gap just over $19. That gap was big volume on the 18th of December last year, 15.7 million shares. I'm telling you, we're kind of in that right now, aren't we? You're going to see support come in on that gap, but boy, that would be the buy out here at about $19 on DH Horton, maybe $19.25, $19.50. But my guess is we got all the volume we need out here, and of course, a stock, as Tom likes to say, with volume off the top. And this one came in on the 24th of August, or no, 24th of July, with monstrous volume. I think that's all you need to know. This thing's going to head down into that first gap. The volume is light. That's good.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, of course, we got a market that's down, but trying to bounce a little bit. I didn't think it was going to be easy. I still think that there's a good opportunity for one of these last 5-10 minutes of the day smackdowns, especially since we haven't really rallied, what about 4 points off the bottom on the S&P cash. Volume probably could have been a little bit better. And we're going to have something to convince people to start rolling these stops. But, we'll have to see how the end of the day comes. And, of course, doing the play-by-play will be Tom O'Brien directly after the show. And after 2 hours, a back-to-back episode from Tom O'Brien, we're going to have the one and only Andrew Heck, who says that he's okay with the Nigerian brothers. Anyway, we'll see. He's got a new piece out on corn on Seeking Alpha, and I guess he's going to be talking about that too. So we've got 3 more hours after my last 3 minutes here. What I wanted to get into in the closing part of the show here, was some of these stocks that were around the Apple ecosystem. I said last Friday that I didn't like at all the way that these things were acting. And, of course, since then we've seen some fairly significant pullbacks. But these things were moving down far before Apple cracked today, and we're telecasting that. I said on the Tech Insider, if you want to see which way Apple's going, just look at the suppliers. They tend to be a very good roadmap for Apple, and you certainly can look at that. And, yeah, well, what are we down here? Apple, NXPI is another one. NXPI. Let's take a look at this guy. Yeah. No volume off the top on this one. These are the guys doing the NFC chip in it, but certainly looks like this thing could find its way back into this gap at $68. RFMD off 3%. RFMD. Let's take a look at that. Probably not a lot in that either right now. But none of these doing good. AMC, Triquint, Semiconductor, TQNT. Yeah, this one looks. This one looks a lot of these could pull back fairly extensively here. Certainly looks like that railroad track tuning fork reversal on Triquint out here. So you'd want to watch this even with a lighter volume. Again, it probably is going to come out there. And if I could sum up what we have here, probably a few people starting to scratch their heads right now. But I think this market is telling us that we have a problem.
This is Houston. Say again, please.
Houston, we have a problem.
So, we're down here. We don't have enough significant bounce off the lows in this S&P. We're going into Friday. We could see, and I think we need to start seeing a little bit of belief in the risk to the downside. Even if you're a bull, I think you would want that. We haven't had it for a long time. And if you just look at the S&Ps, we could have a decent-sized pullback, and it still wouldn't kill the bulls or the bull chart positions out here. So, if you were bullish, I think I would take this opportunity to think about how I could buy stocks on the pullback instead of blue skies forever, like the 1929 song. And I think, not tomorrow, probably Monday, I'm going to play you the songs that went into the crash of 1929. I think I got a couple of them. But Blue Skies Forever, Call My Broker, a bunch of songs that are kind of ludicrous but fun. We'll see you tomorrow, same bat channel, same bat time. Sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.